Okay, it's another weekend. It's a wet weekend. It's a very autumnal weekend here in the UK on this Saturday. So, what better time to settle down with a nice warm beverage of your choice? I'm on the PG tips today and analyse some markets as we normally do. And as we also normally do, why don't we start with silver? I'm normally all about Yorkshire tea. PG Tips is also pretty good, but I like the environmentally friendly packaging that PG Tips have started putting their products in. So, you can see the extreme nonsensical lows down here, where somebody was buying ounces of silver for $11 and a bit. See the highs up here? To the range low. And then it's been a year of torment. We've talked about this already, and it is now a year. There's August. There's August. A year and more now of torment. Everyone's sort of getting very excited about the silver squeeze, maybe in the winter of this year. We had to move down, we had to move up, everyone got very excited again. We had to move down. We had to move up, we had to move down, down. Move down. I don't know what that random notification was. I think it's these Windows updates. There was recently a big update to Windows, and I'm not sure it's helped or made anything better. Yeah, it's a few strange things happening every now and then. But you can see, within the context of this channel, we didn't make it down right to the end of the channel, which would have been at 20. We did, however, take out this wick low here, this wick low here, this wick low here, and more importantly, this wick low here. Now, this is still an extraordinary inefficiency, all the way down to 19.5, more or less. But I think we can more certainly than before adopt at least a short-term positive stance towards silver. And a lot of the damage I've done trying to buy on the way down, even though I was catching some little pieces of this, I would immediately just go in heavier and then get hurt. Especially this hurt. It was this here that hurt me over the summer. Well, this low, why do I think it's important? Well, because this is a long-term fib channel that's captured a lot of important pivots over time, both in the time period you can see and going further back. And we've just gone under and over on that. We've taken out all these important wicks in this sort of blue box area here. We tested this other fib channel line here on the underside before coming down, and now we're going up again. So this has been retested from the underside and we're coming back up. That implies we're going to retest the underside at some point of the next yellow fib channel up back in the 28, 29, 30 area at some point in the future. Any sellers that were here hopefully have been already cleared out by this previous price action. Yeah, so bottom of a range, below the lows of the range, below the wicks, into a key fib channel line. If we bring up our indicators, there's bullish divergence, not so much on the composite index, but I'm just going to peel these down and squash them down a little bit, and we'll look at price volume trend. So price volume trend, for anyone who doesn't know, I'm not trying to be Investopedia or any kind of technical analysis website that would explain what these things do. But my understanding of it is that it takes the day's volume. It takes the day's volume, and if the candle closes positively, it adds a percentage, or a percentage amount, depending on how far the candle went positive in the positive direction, or if the candle was negative, it adds. The more negative it went on the more volume, the sort of a greater percentage of the volume is attributed to the negative. And if there's a doji candle, it's got high volume, low volume, whatever, obviously it's gone nowhere, so likewise this will go nowhere. It's sort of like a reverse ease of movement. Ease of movement will give bigger moves on the indicator when there's less volume moving price, because it's how easy it is for the amount of volume there is to move the price. And obviously if it's easy for price to move, there doesn't need a lot of volume behind it. So this is the contrary. This is additive of volume in the direction of price, whereas ease of movement is can move very far on very little volume. Well, it basically most of the time it tracks price, because obviously you would expect that. Because it's trying to proportionately add the volume by the direction to sort of approximate how much buying, how much selling within each candle, and it's pretty spot on, pretty accurate. I didn't mean to waffle on like that. That was a shit explanation. Read the fucking Investopedia page. Ignore me. But the point I'm making here is look how flat, and we can go back further. Look how flat price volume trend was in the spot silver market, going back fucking however far you want, and then suddenly we get this plummet down to those lows where silver was $11-12 an ounce, and then we get this massive move up. Like if I wanted to see what was going on in price volume trend, back even just in 2018-19, look how far I have to stretch this thing out. And if you look, I mean, this was the takeoff point on price volume trend. Here. Where does that correspond to on price? Here. This was the move that was just represented absurd value. This was the move retesting these lows here that also represented, this is a value area, going back value. So this was in and of itself, even by previous standards, a value area, never mind in relation to this. And then here we're back in sort of the mid area of these highs and lows here. That historically was a higher value, historically was a higher value area, where you might expect to see some selling. It became an accumulation area, the key accumulation area that launched us up towards $30. Now, we're back. On price volume trend, we are back. And we've retraced, do you see? 61.8% of the move from the lows to the highs in price volume trend. But price is not down here. It's not proportionate. Price volume trend is back down here. But look where price is. Price is $4 or $5 higher. That's a very substantial difference. So price volume trend has managed to return to this point, while price has only returned to this point. That's like a positive reversal on RSI, where the indicator is lower, price is higher. Same thing here, but this is on price volume trend, which is, adding the percentage of volume that matches the movement of the price, blah 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 blah. Again, read the Investopedia page. And you don't get signals very often from it. It certainly isn't a traditional signal. But to me, it's significant we've come back into this point on price volume trend, but with that much higher on price. It's not my only reason for. We can probably squash that down now and ignore it for a bit. It's not my only reason for being more bullish silver. And obviously I was trying to buy before, but I wasn't feeling spectacularly bullish. I wasn't feeling spectacularly confident. I kept on doing this anyway, like an idiot, but now I think we have much better reasons. The depression also on Wall Street silver, and the level of cope, you know, people who bought up here pretending like, oh no, it's all still good. I love being down, 30% on what I paid. Yeah, I'm not trying to make money. I'm trying to save the world. I'm trying to fight the Fed. Whatever, keep telling yourself that. But the level of depression, the level of cope, it certainly could represent a sentiment turning point. And also, if we look at bonds have been retracing, and we've come back into like the centre of this triangle here. This last triangle before sort of the up move, we've tagged that. We've reset RSI. And we're going to move up. We're going to move up and out, which was there will be continued belief that rates will be flattened, I guess, or continue to be flattened, or money's leaving stocks, going to bonds regardless of what rates are doing. Flight safety, in which case, why not precious metals also? Any kind of portfolio diversification away from stocks, which might be perceived as increasingly risky, I suppose would. I mean, even if rates did not creep up, it would be the flows of money that began to matter out of stocks and into anything else people can lay hands on. So that even in the context of, this. I'm going to go a bit beyond my scope here, but I think it's plausible that metals goes up. Also, if we look at the dollar, so you can see here this is a very long-term fib channel that I've drawn on the monthly. Now I've kind of now you can say this is the 100% line here, and I've not properly anchored it to these highs. And the low here, it's kind of sloppy, kind of messy. But the issue is, it's on these long-term time frames. I mean, there's also a high back here that you can't quite get to. That I've sort of, I've imagined I've pinned it to the high that I can't quite see here. Maybe if I can I add more data. No. So there's a sort of imaginary high behind here that maybe it would tag more precisely. But this is beyond the point. But it's all about fit. And again, if I highlight the lines, you can see where they're hitting, the areas they're cutting through, and you can see some of them are quite good, quite neat and tidy. I mean, look at this, bang on to the 50. Well, first of all, from the underside one time, from the overside one time, 1, 2, 3, 4. Look what capped this high. Yeah, sure, we got the spike up to the 78. The 70 capped it. I mean, look at this. Look at the way it cuts through these areas. Under, over, swinging around it. We catch these lows, we catch these lows, we catch these lows. Look how we keep wicking down under it. The wicks go through, but then price closes under. Yeah, it's a high, it's a high, it's a high. Yeah? We go through, we backtest, kablamo. And of course it doesn't work every time. Of course not. But it's proved itself to be important, it's proved itself to be relevant. More than enough. And we've gone flat up into it. That was the September close there. We could keep on going. Maybe the dollar is bound to go higher. That would be bad for silver. There it is. There it is on the weekly. We haven't quite taken this high here. That's close to 95. And there's a sort of a whole area here that might be quite satisfying to see filled. Would be my only concern. So like another 1.5% move in the dollar. Well, what would that do to silver? And that should only be really a fifth to a third of a dollar move down in silver. So from where we are presently, if it's going to be proportionate, but of course it won't be. But this is we've hit a little bit of a wall. So when you look also at the bonds, when you look also at what was happening in silver, in that context I was just discussing, it's like things coming into alignment. It's one, not one thing, it's not two things, it's three things, it's four things. We can say we have reason here to want to trade more in one direction than another in the way that we're saying. Here's the daily. We did take this. So we've come into this window above this wick. This is sort of just air, open air, but this was a quite well defined zone here that you can box up. Yeah. So we shall see. We shall see. So I'm long silver. I'm long silver actually from, again, really great entries, because I put my money where my mouth was and I got in under these lows. I bought the wick takes and just thought to hell with it. So, and we've had, you know, the one strong close, a little bit of a pullback, another strong close, a little bit of a pull. Basically, I mean, anything into 22, 25. I mean, it's not impossible to get a really ugly like 1, 2 that comes all the way back down to 2160 or 2190, or even again if the dollar's going to make another high. But a bit close to 95, then I suppose we could come down. Maybe we could hit this channel line here, but I just think this is such a fantastic opportunity. I'm long and I would be looking to stay long, and I'd be anticipating a move towards the range highs. Maybe by Christmas. Good, don't say that. Maybe by Christmas. Maybe by Christmas if we're really lucky. Maybe by March if we're going to go on a steadier time frame. And then we'll have to make our minds up about what comes after that. Would once, twice, and a half, not quite 3 times the charm. 1, 2.5. Would the next time be? Start channeling, start flagging out here, and then up into the mid-30s, up towards 40. Yeah, I'm really getting ahead of myself now, considering we could go like this, all the way down to 17. Yeah. Yeah, definitely getting a little bit ahead of myself there. But it's a good start, is what I'm saying. We've got reasons to believe it may keep going, and it'll be more than just a good start. It will transition into being a good medium term, if you like. There's silver on the 15. Here are those extreme lows. There's wick 1, there's wick 2, I think, on the longer time frames. Delete some of these lines. Look at these lines of angle that I just duplicated and put across. Look how they catch things. Certain angles. But we're coming up into all this nonsense up here, this thickly traded area. You know, what's that, like 22, well, from 22.60 to, you know, maybe just above these wicks, 22.95. I suppose we'll have to break through this or not, or fail, or just swish around and cause chaos and drive everyone mad. Yes, interesting. Maybe let's pop it on the hourly. Ooh, that's better, isn't it? There we go, there's our daily lines popping in. I do wish the daily lines, like, even when I'm zoomed out like this, I would still like to see the daily lines. Because then you just go straight to like a monthly line. You don't get weekly lines. Except for your Sunday line, which kind of gives it away. Stocks. Let's have a look at stocks now. I've made a little bit of money shorting stocks, and I've not actually tried to short stocks since November of last year, when I converted. When was that? March? No. November. So it was somewhere around here. In this area, I sort of converted to being a stocks bull, I suppose. Did I catch this 1,000-point move? Did I? Fuck, you've got to be kidding me. This is when I started focusing on silver. Ha! So, no. Instead of getting benefiting from a move to 3,600 to 4,600, instead of enjoying that, I got wrecked. Hey ho. So yeah, uncharacteristically now, I suppose, getting short. And the reason was really, I mean, you can see how, just look at this channel. It's capturing just a little bit of a high. High goes above, we go back in, we go back in, we go down, we're a long way away, we go back in, and then we get tighter and tighter and tighter and tighter and tighter and tighter, and still look, here we're deviating it, and then look, we're not. We stop deviating it and we bounce exactly within it. And then we fall out of it, and then we back test it, and then we go woomph. Now, the fact that we got, what makes me think there might be more to the downside is that back test. That is a piece of bearish price action that, if this was just a low here, back into this point of origin, taking out this wick to screw around with the bears, then we would have gone up, this would have been a flag, and would have kept going up. This would have been the down move that was there to screw bears, and we wouldn't have had a back test and a rejection. That is the wrong price action for bullishness, basically, for bullish market structure, action, whatever. That's a bearish piece of price action. Now the question is time frame. Maybe that was it. Maybe it was this. That was the bearish setup for this price action. And now, you know, we've gone a bit lower. We've gone to this point of origin. We've gone a bit deeper. That's what's fucked. And now we're going to fuck the bears. This was the, you know, the regular bear trap wasn't enough. We've been going up for so long in this predictable, neat and tidy channel. This was not going to fool anyone. So let's go up. We got him. They all think it's going to do doom and death. Now we've got him. Now we can rock it. You can see there's a bit of a bullish divergence here. That's a very strong takeoff up the lows, but we've only come into this sort of, you know, this whole congestion area. Yeah. Anything up to here, I would say. And in extremis, we could get a very high retracement. We could come up and maybe come into here even and retest the breakdown area of the back test, the point of origin of the back test fail. Yeah? in extremis, that could happen, and it still be a bearish overall. So pick your poison. I would lean bearish still. Again, because of the back test. Because of this unreal price action that's just been steady, grinding higher. You know, is there anyone left alive financially? Not in terms of people's opinions that anyone can give, but is there anyone left even to be short after all this? So, and again, the back test, that's something you see that's bearish. Could be wrong. We've got the divergence, but on the whole, I sold here for like a. Again, most of my margin was taken up with these silver longs, but I had a teeny bit left, and I went short, and I took some near these lows. And it was nice, I made a few pounds. Helps cover up for the errors and bad entries and whatnot from time to time. Again, I'm doing things in the wrong order. I'm recording this before I've looked at all the breadth charts and ratios and so on. But I would still lean bearish. No, I'm not even going to start on the FTSE. Wait a second, have I just come back onto the S&P? Yeah, I have. Yeah, there we go. Now we've come back into this whole mess of an area. There was that wick at the close, but I mean, it's the end of the day, it's the end of the week. People are going to get out anyway, I suppose. But we've got, what's this? On the hourly, that could be a negative reversal. And again, we've come back into this whole mess here. So decent. I'm holding short from around this area because it's a good area to short. Whether it's a win or a loss, it's a good area to short. Oh, here we go. Here's the Nasdaq. Never mind the hourly. Let's look at the daily. Yeah. And in a sense, buying under this pivot line here, maybe that's the play. Just buy under this. Ease of movement is moving up. You got your positive divergence, your bullish divergence on the ease of movement here. Maybe this is the great buy, and when we're on our way to 20,000 or something, it looks better than the S&P, I suppose. We've looked at the dollar, gold now. So, what to make of gold? Well, you can see this is the horizontal pivot here that was important, and you can see this is a diagonal pivot that's been important, persistently important in the past. And we've just gone below it. 1, 2, 3. 1, 2, 3. And we've closed above. This mess of price action, this pivot, and also on the diagonal, we just closed above it. Trend is still red. But is this flag satisfied? Is it completed? Is this going to be... This was the lower low, this is the higher low, and now we're on our way to maybe back up to 1940 area. It could all still go horribly wrong, and we could still see a tank into, why not, the 1590s, the 1560s, all the way down here, all the way down here, all the way down here. No. But it's not the most horrendous price action. It's not the best, but it's not completely horrendous. So again, there's a potential supportive case there for my silver longs. Let's look at a few random things now. Let's have a look at the guppy. So back at this point of origin, with this move, we found buyers and we closed higher. If we're exhausted, we'll roll over, go lower. Whoops. Or maybe we've had enough ranging action, we'll break out the range. But this point has been emptied. And that low took that low, so the next low is this low. And then this important, what's that? Some sort of weekly pivot I've put on for some reason or other. So I suppose if we're going to go down that, it could be a next area. And there was some consolidation here, some consolidation candles here that led to this up move. Maybe into here. Yeah. Let's have a look at, well, I mean, euro, anti-dollar. Very similar to silver. Look at this, just running these wicks. Running these wicks, we're still getting, look at this on the ease of movement. Over a much longer time period, we're still getting the, just about, I mean, the trend on that is negative, the trend on this is negative, but you can still sort of say we're getting higher lows on the histogram there, if that counts for anything. Otherwise, again, we're coming back to this area here. Just like that area on silver. Amazing, isn't it? Bitcoin's been interesting. Because look, this is the thick weekly yellow line that's been duplicated from past price action, and I've thickened it up even more. It's this, it's this, it's this, it's this. It's the same line. It's a line of angle duplicated from the past and just put in, you know, by eyeball somewhere that seems vaguely appropriate. And I had it in from here. We came near it, we went up, we distributed some more, we sliced right through that sucker. One time, two time, above. On the daily, this move down here on the daily, if we go down to the daily, is this. We came above, and I said in an old video, I think, or an old Twitter, or somewhere I said, or maybe just to myself, this will be the fake out, we'll come down and we'll go back up again. And I said above here now, you want to be buying Bitcoin. Then we started channeling, rising channel, distributive channel, into this area here between like this low, this high, just filling this weird space. And we sold off. And where did we go to? Kablamo, right into the that line of angle again. We went up, we came down, we came close, but not quite. And then you got this crazy move up in Bitcoin. Now we're coming into these highs. If we're done with testing this, that should still be bullish overall. We may have to chop around, we may backtest this line, or maybe it's off to the races. That area's gone, that area's done. The next area would be so above these highs. So, I don't know, maybe like there. Yeah. Uranium's been very exciting. If you remember, I called uranium long literally coming into this purple box. Whether I fucking published the video or not, I don't know. But I did, I fucking promised you. Somewhere I called it. Could have been my Twitter. If you come back here, just buy uranium, and then look at that, from 1700 to 2800, and then down, and we've sort of consolidated here. We've done this gap fill, we've tested the gap. Do we want to go deeper? Because there's a gap, you know, there's not quite a gap here. There's a little gap here. You know, and that seems to have been enough to satisfy it. We've reset our indicators sufficiently, and we could be having another move up. So if that's positive for commodities overall, again, what are we on, like reason 4 or reason 5 now, to support our long silver trade? I still think the most interesting thing was this though. Coming back into here on price volume trend is the 61.8, and we've only got to here. And then a strong reaction in price. I think that is, for me, that's the most convincing, or the most reassuring, the most confidence-giving part of the story. So let's stop there.